Amid the rise of artificial intelligence, it is striking that according to a recent MIT study, 95% of corporate AI initiatives are failing. The pressure for immediate results has also fueled a market full of false promises. There are no solutions that can single-handedly transform the future of your company overnight. What truly makes the difference in successful projects comes down to two fundamentals: reliable data and ongoing support. Take the case of Arkham Technologies. This Mexico-based data and AI platform works with a customer-centric methodology. Arkham focuses on understanding your challenges and building tailored solutions with one clear goal: delivering results that matter. Arkham begins by ensuring 100% reliable data, by connecting fragmented sources, standardizing business metrics, and deploying high-impact use cases. The platform enables you to unify data and fragmented systems, make decisions based on fully reliable metrics, and solve critical challenges with AI models tailored to your operations. Within the first 4 weeks, once your data sources are integrated, you'll be able to activate automatic closings and reconciliations, inventory control and replenishment, predictive maintenance, anomaly detection, automated forecasting, and other industry-specific capabilities. Request your demo at arkham.tech/es/whitepaper. Welcome to Mex Moves, our weekly podcast where Damian Fraser and I, Eduardo Garcia, dissect Mexico's business. How are you, Damian?
Very well, Eduardo, and you?
I'm doing well. This week we have two very interesting interviews. One with Estephany Ley, Managing Director of Retail Banking at BanCoppel's, one of the mass-based or mass-directed banking companies in Mexico, and another one with Daniela Dib on data centers and the energy bottleneck that some of them are facing and what are they doing to avoid those problems. But why don't we start, Damian, today with the news, the breaking news about Chico Pardo acquiring 25% interest in Banamex. So what do you make? We've talked about it before, but now the transaction has been formalized, apparently.
Sure, Eduardo. Well, I think overall it's a win-win for both sides and for Mexico. So let's say 3 sides. For Fernando Chico, he's, as you mentioned, agreeing to buy 25% of Grupo Financiero Banamex for about $2.3 billion. It's a good valuation on a price-to-book value, about a 0.8 price-to-book. Banorte trades nearer 2 times book. Now, the issue is that its return on book or return on equity is much lower using first half numbers and analyzing them. Grupo Financiero Banamex is about a 9% ROE and Banorte is over 20. So the upside for Fernando Chico, which we'll get into in a moment, is improving the profitability of Banamex. And if he can improve it, to Banorte levels, then, and if it stays at the same valuations on a price to earnings basis, then which he's paying about 9 times earnings, he could double his money, let's say in a 3-year horizon. For Citigroup, I think it's a good deal because they've obviously been struggling to offload Banamex since they announced the sale some years back. The deal with Herman Larrea fell through. The IPO process has been taking forever. So now they have an anchor investor. They have a chairman of the board who's widely regarded in the financial sector, and they will, be largely passive investors going forward, and will sell. Maybe if they're left with 75%, maybe they'll sell half down to 49%. So they'll start to deconsolidate it, and then over time they'll get rid of it through subsequent sales, presumably starting in the second half of next year. And hopefully Fernando Chico will do his magic from their perspective, and the return on equity will go up, and they'll be able to sell at a higher price than they sold to him. And for Mexico, it's good because Banamex has clearly been very poorly managed by Citigroup. Its market share of loans has gone down quite significantly. Its profitability is, as we mentioned, much lower than Banorte's or Santander's or obviously BBVA's. So having a bank in Mexican smart Mexican management's hands that will grow the loan portfolio and adjust costs will put more competition into the system, and the easiest way to improve the efficiency of Banamex, which we're already seeing. It's had faster loan growth in the system in the first half of this year, for example. The easiest way to fix Banamex is to grow the loan portfolio in a prudent manner. It's under leveraged versus other Mexican banks, and it also has a very solid deposit base. So its deposits are 30% or so higher than its loans. So it's got a lot of room to grow that loan book, and both from a liquidity point of view and from a leverage point of view. So I would guess that Fernando Chico and his team will do that. So I think it's a good transaction. Frankly, it would have been very difficult to do an IPO without an anchor Mexican investor, because people have said, well, Citi's selling its shares over time and wants to get rid of this asset, but who's going to be running the bank? And Mexico's not that used to having kind of non-control sort of boards running a public company. So having this anchor investor certainly helps the IPO process. So I think it's all in all it's positive development. Some interesting kind of nuggets, I guess, Eduardo. It's not just a bank to begin with. It's also got Seguros, Banamex, its insurance arm, and that's pretty. It's mostly life premiums, and that's pretty successful insurance business. I think it has an ROE around in the first half around about 20%. It's been over that in previous years. So that it's also got a pension business, Afore Banamex, which is I think the fourth largest pension fund in Mexico, with about almost 9 million affiliates or clients, and it's been doing reasonably well. So now Fernando Chico, I've like everyone in Mexico's financial sector, been tracking him, since the, some people who are older than me, since the 80s, but in my case, it's the 90s. So he had his own brokerage firm in the 80s when he was still, pretty young, in his late 20s. And then he merged that into Inbursa, I think in 1992, and as a result became a minority shareholder a significant minority shareholder in Inbursa, Carlos Slim's financial group, and became the CEO from about 92 to 97 when he left. And that was a very critical period because you got the boom in this, pre the tequila crisis from 92 to the end to mid 94, let's say, and Telmex was selling, the government was selling stock through Inbursa to global investors. Fernando Chico was effectively the investor relations as well as being the CEO of Grupo Slim, if you want to call it that. So he helped kind of oversee, along with Slim, that massive increase in Slim's fortune in the early 90s. And then along with Slim, they navigated extremely well the tequila crisis. Inbursa was basically the only sizable bank that wasn't affected. And in 95, when asset prices crashed, they were able to buy a lot of financial assets at pretty distressed levels, and were able to come out of the crisis even stronger than they went into it in sort of classic Slim mode. So Fernando Chico built up his first fortune in that period, and then when he left to go on his own and found Promocap, he was able to basically convert his Promocap stake into his Inbursa stake into what's now a multi-billion-dollar kind of family office, Promocap, that does lending and does financial investments. The Chico Pardo Group. The second interesting nugget is that they have a big tourism business, RLH, which has hotels across the Caribbean, some on the Pacific coast, Rosewood, and others. They also have, I think, the Via Magna in Madrid. So that's one of their. It's a listed vehicle, and it seems to be doing very well. They also, of course, have a co-controlling stake in Azur, the Cancun led airport group on the Caribbean, which also has the Puerto Rican airports, where that's been a massive sort of successful investment. Probably 15-fold returns, and it's also been paying, including dividends. It's just paid he just got a $300 million dividend out of it, which is presumably helping finance this. And he also has a shopping mall company, Costa Verde, that he took over through a SPAC, special purpose acquisition vehicle. So he's quite diversified. He was an early investor in Unifin, and cleverly was able to get out at least a big part of the stake in the Unifin IPO before the company went under. A second interesting nugget is that he has sort of a famously difficult relationship with Germán Larrea, who was the previous bidder, as we all know, for Banamex. So there was a takeover sort of fight between Larrea tried to take over Acosta Verde with his own shopping mall group that he bought, and in the end that didn't pan out, but that didn't help relations between the two of them. And then previously there'd been a spat over buying shares in Nasur. So there's a history between the two of them. Another thing to point out, Eduardo, is Fernando Chico is actually the brother-in-law of Roberto Hernandez, who, as you remember, was along with Alfredo Harp, bought Banamex back in '92, and then sold it to Citigroup in 2001. Fernando Chico has had this obviously familiar relationship with Roberto Hernandez, professional relationship with Carlos Slim. Roberto Hernandez's partner, long-term partner in business, was Alfredo Harp, who's the cousin of Harp Helou, who's the cousin of Carlos Slim. So these people are all related. Fernando seems to have sort of maintained good relations. I think he joined in Bursa just after Slim took control of Telmex, which was a privatization where Roberto Hernandez's group competed with Slim to buy Telmex from the Mexican government. And of course, Slim won that, and that probably didn't lead to great relationships between those two family groups, but Fernando Chico seems to have maintained good relations with both sides. To give a sense, Eduardo, of how Banamex's fortunes have declined, back in about 2000, Banamex, still then controlled by Hernandez and Harp, made a bid to buy Bancoma at the same time, almost exactly the same time that BBVA was making a bid to buy Bancoma, which was the second largest bank, but had run into asset quality problems and needed new capital. And the Banamex bid, which was to give Bancoma shareholders 1/3 of the combined entity, roughly 1/3 of the combined entity, and Banamex shareholders were going to be 2/3 of the combined entity. So roughly speaking, Banamex was being valued at twice Bancoma, and that was considered a good deal, but it didn't go through. I think mainly because people were worried about concentration in the banking system, because it was at a premium to BBVA's bid. It's amazing to think that BBVA only bid about $1.4 billion for Bancoma. And right now, Bancoma is making about BBVA Bancoma, the Mexican division of BBVA, makes about $6 billion a year. So maybe it's worth $60 billion. Whereas if we just heard, Banamex is being valued at about $9 billion. So it's BBVA is now worth more than 6 times Banamex, whereas at that time, Banamex was worth maybe 2 times Bancoma. So that's a sort of delta of 12 times. It's quite extraordinary how well BBVA has managed the Bancoma franchise and how poorly Citi, which a year later took over Banamex, has managed it because of, I think, different reasons. But you had Citi much more focused on its U.S. business. You had the Oceanografía scandal, which led to heavy focus on compliance. Banamex was always very targeted at the high end in Mexico, and clearly the Bancoma, now BBVA, was more targeted at the middle class, and the middle class is where the growth has been in Mexico. So partly it's reflecting the market concentrations between the two banks, but nonetheless, the outperformance of one over the other has been quite dramatic. I think where Fernando Chico is going to focus a lot is cutting costs, so the efficiency ratio, cost to revenues, at Banamex is very high. It's about 65% or so, and that's double where BBVA is. So I think he's definitely going to try to cut down costs, and as I mentioned, grow revenues by expanding the loan book. Banamex is very focused on credit cards. It has about 9 million or so credit card customers, which are very profitable. It's a well managed credit card operation, but that's where arguably, at least in the fintech world, entry barriers are lowest. We're seeing lots of competition from RappiCard, from Story, from Plata, from Nu, as well as all the incumbent players. So it's the business that perhaps is most subject to competition. That's quite a lot of things to digest. Eduardo, what's your take on it?
Oh, you covered it very widely and broadly, Damien. You left me almost without anything to add, other than just to confirm the poor management that Citi did with Banamex is that, as you said, it was fighting with BBVA for the number one, number two position, and today Banamex is the fourth or fifth largest bank in Mexico, and you measure it by different indicators. So that just reflects that the bank has not been able to keep up with not just BBVA, but with others that have taken over some of the markets that they were controlling at some point. And one last thing that you didn't mention, and thank God you didn't, so I could add something, is that Chico Pardo also has a stake in a port operator, Carex, which is the largest port operator in Latin America. He's done apparently very well with that business. So I think it's a great news for Mexico. Like you said, I think Chico Pardo is an emblematic businessman in Mexico. He has made it to the Forbes list now with all his investments. He's a success story in many ways. He's sharp. I don't know if you had the chance to talk to him. I had interviewed him in the past. He's a very amiable person, but obviously a tough businessman. And so I think this is great news for the banking industry in Mexico. And for us consumers, I think we will benefit from having Banamex come back and try to regain what it was many years ago. So enhorabuena, as we say here. I think the transaction will please everyone. And the IPO is still on the table, but with an anchor player that will probably show results in the next few months will make much more sense for everyone. And it's a big challenge for Chico Pardo, but he's proven to overcome some of those challenges in the past.
Yeah, I guess maybe the one issue that is of potential concern is his age, right? He's 73. One would assume that within 5 or 6 years, he'll want to be handing over the management of this entity. We don't know or at least I don't know his family, the generation below him. They've had obviously a much lower profile than he has, although they seem to have done a good job. But I think they've taken over the managing of RLH, the hotel operators. What will happen when he hands over? And unlike there isn't. I mean, he was running in Bursa, in the 90s, which 30 years ago, but there haven't been running a retail bank. And Bursa wasn't really, in those days especially, wasn't a retail bank. So there was not a lot of retail banking expertise. This was a sort of family office hedge fund in airports, in hotels, retail, in real estate. So there's not a lot of experience, and he's in his 70s. So we'll have to see how the transition to the next generation in his family occurs, and we'll have to see what kind of retail banking experience he brings in. Obviously, he inherits the existing team, which I've heard Manuel Roma, I've heard good things about. And he's, at least for the now, they're staying there, maybe forever. So we'll have to see how he manages that, how he manages the generational change. And one thing is managing a successful private equity, family office, hedge fund, airports, ports, and you name it. Another thing is running a highly regulated, very high profile, consumer bank.
Yeah. No, they did announce that the head of the bank and the head of the board of the bank will remain in place. So I guess that's to avoid any hiccups with the change of guard or the change of ownership. Well, that's good news. Daniel Roman, they both will be keeping their positions in Banamex. I do believe that he has a backbench that will help him make that transition. But yeah, that's something that will be in the questions of people's minds. Sorry, I said Daniel Romo. It's Manuel Romo, and Nacho de Champs is the head is the president of the bank, and Manuel is the general director or CEO.
Yeah, so de Champs gets demoted from being chairman of the financial group to chairman of the bank, which, he's ex-BBVA, obviously, and also highly regarded. So it's a good team in place. Now the goal will be to cut costs, grow revenues, and return that ROE to sort of high teens. And if you can achieve that, then the price to book will go from 0.8 to 1.5 to 2, and it'll make a very good return. And meanwhile, Citi will still have 75% of its stake to sell, and will be able to sell at higher prices if it all goes according to plan.
Yep, that's the plan, I guess. Moving forward, Damien, you wanted to talk about a tequila transaction that happened recently.
Yeah, I read that Tito's handmade vodka, which is an Austin-based vodka company, very big in the US, is acquiring a majority stake in LALO Tequila, but which is also actually Austin-based, and which will give LALO better distribution, global distribution, and also give it money, presumably to allow the existing shareholders to cash out a bit and maybe to grow the business. LALO, which we don't, unless you do it well, I don't think we know it, in Mexico, was founded by Eduardo Lalo Gonzalez and two other founders. And it kind of sells itself as despite being Austin-based, obviously the tequila, as it's required to be, is made in Jalisco, in tequila. It's got Highland agave and deep well, sort of Jalisco water. It's sold about 155,000 cases in the US. It's been growing. It's been growing pretty fast amongst sort of high niche, high brand, quality brand tequilas, perhaps the fastest. One of the interesting things I found about it is that Don Julio Gonzalez Estrada was the grandfather of Lalo, and he was basically, it's a complicated story, but he was the founder of Don Julio Tequila. And then the son of Don Julio Gonzalez Estrada also worked for Don Julio Tequila. Don Julio had a sort of complicated history. It was, I think, at one point it was owned by Seagram's, and then Seagram's was split up. I don't know if you remember that kind of corporate divestiture, and they sold it to Diageo and to Cuervo, and then Diageo bought the 50% that Cuervo had back in about 10 years ago, and then in return gave Cuervo Bushmills whiskey. So there was a kind of asset swap. So Diageo now has Don Julio, but the grandfather of the seller of Lalo is claimed to be one of the founders of Don Julio, the iconic, one of the iconic tequila brands here.
Yeah, it's another interesting transaction in the tequila world. I guess it's a drink that is still has tremendous potential, and that's how they are viewing it. I really haven't tasted Lalo Tequila. You've created a little bit of appetite. I know it's early in the morning, but I'm going to go out and buy a bottle of Lalo Tequila, see how they taste. I love tequila.
You might have to take a flight to Austin. I mean, tequila demand in the US is at least double what it is in Mexico because of the population gap and because the tequila price is a lot higher there than here. But overall, tequila, having done extremely well for a long time, sort of post last couple of years, you've seen an important slowdown. I think prices have gone up a lot after COVID, and there's been some kind of resistance to the sort of ultra premiumization strategy that everyone had been following. And then in addition to that, the Gen Zs and my children, your children, probably drink less than we drank, at least mine do. So some aversion to heavy drinking. Tequila's held up better than some other spirits, but it hasn't been immune to what's been a sort of a problem in the global spirits industry. And you've seen, Diageo's stock price, underperformed quite significantly over the last couple of years, because of that. And it may well be. And then there's been this explosion, and LALO's is an example of it, of these kind of niche tequila brands. And it may well be that there's some consolidation is required, and some selling out of these niche brands to bigger players that can sit out the tough times and provide distribution and so on. So we may see more of these small tequila brands ending up in the hands of the global players, if the global players want any more, because the global players already have their tequila brands in place, which may be why LALO's was bought by a relatively small player that was strong in vodka, and not by Diageo, which last thing Diageo wants now is to buy another tequila brand with all the brands it already has and the problems that it's going through.
Shall we move forward to the continued appearance of Carlos Slim into government contracts? That was an interesting story that happened a few days ago, Damien, where the government announced that two of his companies, one in Mexico, the other one in Spain, Grupo Carso and FCC, the bidding contest to build a section of the railway, the passenger railway, that will go from Saltillo, my father's hometown, by the way, to Nuevo Laredo. And what is interesting about this is that the government is moving ahead with its plans to really bring back passenger trains to Mexico that were sold or canceled by the administration of Ernesto Cedillo because they were losing lots of money back in those days. And there were some union problems. And now this administration wants to build a few rail lines between urban centers, which I think makes a little bit more sense than the passenger train that they build in the Yucatan Peninsula. That's for tourists, and that doesn't seem to be attracting a lot of passengers. The bus system in Yucatan is pretty good and reliable. And while I think a rail train system that connects Mexico to Querétaro, Mexico to Saltillo, and then Nuevo Laredo, Mexico to Pachuca, will probably not be profitable like we've seen in any other country that passenger trains don't make money, but at least that they do provide a transportation service, reduce traveling time from people from one place to another, and increase the efficiency of an economy. So Carso, having participated in the Tren Maya, is again going to do that with this new section of the Saltillo-Nuevo Laredo train. The one that they will be building in the next few months will be from Saltillo to Monterrey, Santa Catarina mainly. And the contract was worth $1.7 billion, and it's about 111 kilometers. So Carlos Slim is still confident the government is gonna do well, and that he will be able to profit from these public works.
Yeah, I guess he and his companies have less payment risk than the rest of us. He's probably going to be able to collect, whereas the historically, at least, the problem about being a major construction supplier to the government is getting paid. But I'm not saying he doesn't have that problem, but he probably has it less than the rest of us. I've been taking the Santa Fe to Luca passenger train a bit. It works brilliantly. I'm a huge fan of it, and it kind of underlines a bit what you said, which is the trains in the densely populated parts of Mexico. On the face of it, without having specific numbers, make sense. And hopefully take cars off the road, or at least stop the car growing as much as it is. But the trains in these very lightly populated areas such as the Maya train are absolutely bonkers from my perspective. It's perfectly easy to take buses. There's very little traffic, and the environmental damage has been horrific.
Yeah, no, I haven't taken that one. I mean, and I like to take every public transport there is. I've taken the cablebus and everything else, you name it, but haven't been able to do that one. But I've taken the suburban that takes you from Mexico to Cuautitlan, and that's the one that's going to take you. Well, they're going to build a train to the IFA, and that works brilliantly. And I think the Mexico Querétaro train also makes a lot of sense. I don't know if you've been on the road, but it's full of trucks and trailer trucks, and it's quite tense to drive on that road. So if you have an effective train line that takes you to Querétaro, a beautiful city, it'll make a lot of sense.
Yeah, I actually asked Andrés Lajou, who's running the federal government's train program, and used to be the Minister of Mobility in Mexico City under Sheinbaum, on the show, but hasn't yet responded. But I'd love, if you, in a very unlikely chance that he's listening to this, I'd love to have him on and explain what the train plans are, and when and what the investments are, and what the return on investments are going to be, and how that's going to help mobility over Mexico, because mobility is obviously one of the many constraints. We're going to hear about energy constraints in a moment from Daniela. One of the major constraints to economic growth, but also towards kind of leveling up between different regions of Mexico that have very different levels of income.
Let's send him this podcast. He will be probably seduced to come on the show. I think it'll be a great add-on to our weekly podcast. And before we go to the interviews, Damien, you had something else to say about the Chinese tariffs, right?
Yeah, I got a chat from a listener saying that maybe I exaggerated last week the impact of the announcement of the up to 50% tariffs on countries that Mexico doesn't have a free trade agreement with, which is mainly China and Korea, Brazil. And they gave me a great research report by Miriam Acuna, who's the GBM chief economist, who's actually been on this show. Hopefully will come on again. So as we mentioned, the tariffs are going to go up to 50, but not everything's going to be 50. So light vehicles are apparently going to be 50, but auto parts, depending on what they are and whether Mexico has a sort of competing offer, 10 to 50. Iron will be 20 to 50. Apparel will be 35 to 50. Appliances 35 to 50. But as Mexico does almost all its trade, the vast bulk of its trade is still with the US. The impact on Mexico's effective tariff rate may only go up to about 4% from currently a little bit under 2%. So it's a doubling of the effective rate, but it's still, in absolute terms, a relatively low effective rate. And as a result of that, the impact on inflation should be less than 1 percentage point. But that's still, with inflation running at just below 4%, that's still a 25% increase in the inflation rate, if that's the right way of expressing it. But we shouldn't think that Mexico's becoming a sort of protectionist haven under this. But the effective tax rate is going to be relatively low. So apparently China is about 50% of Mexican imports from countries it doesn't have free trade agreements with come from China, and then a bit over 10% from Taiwan and about 10% from South Korea. So between China, Taiwan, and South Korea, you're talking about 80% of that. And we also have to see, because these are pretty big ranges, exactly where the tariffs lie. And then there have been some stories, there's one yesterday in the Mexican press, that the Chinese car sellers in Mexico, which now account for about 1 in 5 cars, are going to absorb almost all of the tariff increase. So it'll hit their profit margins, but won't affect the Mexican consumer and therefore inflation that much. and then they have the capacity to absorb that. Apparently, according to the one story that I read. So we'll see how it all pans out. But obviously, when you see these announcements, it's key to crunch the numbers and to be focused on the quantitative and numerical impact, and it may not be as great as we feared last week.
Correct. Yeah. It's always hard. I mean, when these announcements are made, to be able to get all the info, because you don't know exactly, like you said, where the tariffs will end up being left at. So, but after that clarification, and this is an example that we like to hear from you, listeners. So send us your requests, comments, criticisms, whatever. We're open minded. Don't worry about us. But shall we move on to the interviews, Damien?
Yeah, just one other thing, Eduardo, before we do that. The July GDP proxy came out. And I don't know if you got a chance to see it, but it's pretty bad, actually. GDP fell a bit over 1%, 1.1%, and 0.9% year on year, and 0.9% month on month. And also there were downward revisions to previous months. So basically, growth is zero for the year so far. And what's dragging down the economy is definitely industrial production. That's down. It was down 1.2% month on month. Manufacturing was down 1.6%, and services, which is mainly consumption, which in previous years have done very well, are also performing poorly. The economy is not in great shape, and I think it's a kind of combination of the tariffs from the US and the tariff uncertainty from the US, then the change in policy to China probably is having a short-term negative impact, as the Chinese probably using Mexico less as a gateway to the US, which long-term might be a good thing, but in the short term at least, generating some employment, some investment, that kind of recycling of Chinese products to the US with some light value added here. And then the consumption has been soft. Wage increases in real terms a bit lower than in previous years. Credit growth has also slowed down a bit. And the weather hasn't helped. It rained a lot over the last 4 months, which tends to hurt consumption, even if it's great for electricity, thanks to the hydros and the dams being full. So we're in a period of disappointing growth. Hasn't stopped the stock market performing super well, up 25% this year. But the consumer names within the stock market, especially Walmart and FEMSA, haven't performed well. What you're seeing is the banks doing well, like Banorte. You're seeing obviously the gold and silver companies like Peñoles doing well. Grupo México, copper company doing well. American Mobile's also had some good results and good performance. But the GDP has been, and these latest numbers at least indicate some disappointment. And maybe that's not totally different to what's going on in other parts of the world, where growth is slow, even though financial markets have been very, very strong.
Yeah, I did see the news. It surprised me also in the negative sense of the word, but it was also interesting because a few days before this announcement came, the IMF and the World Bank had upgraded their numbers of Mexico's growth for the year, which was natural because obviously the previous figures that they had given up were quite negative, and they saw a few changes in the Mexican growth rate. So they upgraded them higher, but I guess they will have to lower them after what we just saw in July. And it was funny to see that the president, Claudia Sheinbaum, telling them, the IMF and the World Bank, I told you so, that we were going to grow more, and maybe she will have to reverse that later on. It's the ongoing struggle of predicting how the economy evolves. But the latest numbers are the latest numbers, and Mexico is not looking quite promising on the growth rate, as well as on the generating of new jobs in the private sector. Those have been quite negative as well. Let's move on, Damien, if you don't mind.
Sounds good. So today we're joined by Estephany Ley, Managing Director of Retail Banking at BanCoppel. How are you, Estephany?
Hi, Damien. Thank you for having me. I'm doing great. Thank you. How are you?
Great, also. So Estephany helps oversee one of Mexico's largest consumer banking platforms with a strong focus on inclusion, efficiency, accessibility, part of the retail giant Coppel. Her work spans the bank's core products like personal loans, credit cards, mortgages, remittances, and of course, its digital presence. So, Stephanie, maybe we could just start off with some sort of basic understanding of BanCoppel's market presence here in Mexico. How many clients does it have? The size of its balance sheet, deposits, credit portfolio, and roughly how does it fit in the greater sort of context of the Mexican banking system?
I'd love to. Thank you, Damien. So just to get a sense of BanCoppel is the banking arm of the Coppel Group. The Coppel Group, as you may already know, is a retail and financial services conglomerate based in Mexico that's catering to mass market and bottom of the pyramid mainly. And we have about 1,900 stores, of which about 1,500 have a bank branch inside, although most stores also have the component of financial services, even if they don't have a bank branch inside. So altogether, we have about 25 million clients across the different business units. So we do have financial services on the retail side, which is basically a closed loop credit line that allows customers that come into the store to buy and purchase items on credit. So large ticket items like cell phones and fridges and, furniture are basically bought on credit. About 60% of our purchases are done on credit. And this gives access to this segment of the population that maybe won't have the cash on hand to be able to make the purchases when they need them. So it creates a really good access point for this type of customer, especially because I want to say a little over 50% of our customers have never had access to a financial service before they come to us. So it's really like a step up in terms of having them come into official financial services and into the banking world. Once they're with us and they buy on credit with us and they behave well and they pay, their monthly installments on time, we start giving them access to other products. So we give them access to checking accounts, we give them access to other types of loans. We recently launched payroll loans. We recently launched auto loans, mortgages. So we really have the full suite of financial products for our customers, especially when they start with us and they want to grow with us. We've just created those capabilities. So that's where we are right now.
And how big is your loan portfolio, and how is it split between sort of installment loans and other loans that you might have?
Right. So we have the biggest part of our portfolio is on the retail side, and that's the closed loop credit line. And that's just because it's our starter product. So most customers start out with the closed loop credit line that they use to purchase on credit. I'm gonna check with my team to see if I can give those numbers out, just because those are private numbers and it's not a public company. On the bank side, we have pretty large deposits equivalent to 150 billion pesos, depending on what exchange rate we use, but I'll let you do that one. And we have about 50% of that on credit. And that's split evenly pretty much between credit cards and different types of loans, including just personal loans, payroll loans, and now mortgages and auto loans. And I like to think that we're building out our financial services, not just our financial services, but the entire ecosystem for a mass market that has a lot of elasticity in terms of what type of person it goes to. So if it's good enough for someone who earns, 20,000 pesos a month, it should be good enough for someone who earns 100,000 pesos a month. And I think in terms of the experience that people have when they download the app, when they, apply for a loan, as long as you have a really good customer experience with really good UX UI and it's really intuitive, it should be indistinctive how much you're earning or what your walk of life is or what your day job is. So I really think that if you create a really good experience around your products and services, you're able to expand the scope of who your target market is.
I'm guessing that today you don't have that many customers who make 100,000 a month, and that most of your customers are sort of nearer the 20,000 a month. What are you planning to do, or what do you need to do to become kind of more attractive to sort of upper middle class Mexicans?
Right. And you're totally right. And the reason why you're right is because I really think that our client base really resembles what the Mexican population is like. And in the Mexican population, you automatically have a huge disparity between the people who earn 20,000 pesos a month versus 100,000 pesos a month. So if you take proportions, we look pretty much the same as the population in general. And you're right, we're probably less attractive top of mind to those customers that are more upper middle class or just, upper class in general. And I think the reason was that we didn't have the right product mix for those types of customers. That's why we launched auto loans. That's why we launched mortgages, because those people, they're looking for alternatives to their daily lives, and their daily lives involve purchasing homes and purchasing autos and, a lot of times building out their businesses. So we have personal loans that, range up to right now 500,000 pesos, which is a pretty good amount for someone who makes 100,000 pesos a month. So we've increased the range of our current products, but then we're also launching new products. And I think the main part is, how do we create a digitally native experience that for, upper middle and upper class is really important, as well as how do we reposition our physical presence to be closer to that population? Because we used to not be close to them, right? We used to be kind of in remote areas or in densely populated cities, but more in like town centers as opposed to residential areas or places where this type of new segment of customer for us would be. So that's something that we're doing to be able to be a little bit more appealing.
Yes, thank you, Stephanie. And in a sense, the change of imaging and all the changes that you've accomplished lately, I think, are aimed at that goal. Am I right?
You saw that. Yes. So we recently went through rebranding. So we have a new logo. We used to have, as you know, a logo that was an ancient key, which is very emblematic for the group, right? Because it was like the key to everything, your key to life, your key to financial services, your key to social mobility, your key to be able to have access to, a better life in general, which is the slogan, right? Coppel betters your life. So this key was so emblematic. And right now, the entire group at all business level units, we're going through a very deep transformation at the technological level. We're going through a transformation in terms of product offering. We're going through a transformation in terms of the type of talent that we want within the organization. And to have this transformation and not have it be physically visible or visually visible to our customers was kind of a missed opportunity, right? So this was something that we've talked about for a couple of years, but recently, since we're going through so many changes, it just felt like the right timing to go through with the rebranding. So our new logo, and I'm sure you've seen it, is a digital key, right? So what it resembles is when you unlock your phone and you have, like the little dots that you press on to unlock it. So it's kind of like a digital, more modern type of key. So we want to stick with the key kind of imagery that opens doors and opens access to multiple things, but in a more modern way. We also went through a change of CEO. It's a generational change. So as you know, this is a privately held company and it's family owned. So we just went through a change of CEO and we're in that transition. So we're basically going through a lot of changes, a lot of modernization, and a lot of very exciting things to come.
Upgrading all the elements to hit the right buttons. Let me ask you, at the beginning you said you're a mass market bottom of the pyramid institution. Obviously, you're aiming to flatten the pyramid probably. What's your take on the bottom of the pyramid approach to digital financial services? How are Mexicans dealing, from your experience, with the digital financial framework?
I think it's very generational. I mean, the new generations, it doesn't matter what part of the, pyramid you belong to or how much you earn each month or what your day job is. New generations, they want everything digitally native. And I think it doesn't really matter if you're mass market or bottom of the pyramid or top of the pyramid, you want a good experience. And that's what we're focusing on. How to create a digitally native experience that appeals to everybody. Yeah, I think that's something that we're just focusing on.
And let me ask you a question on the macro economy point of view. Mexico has brought up 13.4 million people out of poverty. Do you see that reflected the numbers of the banks, not the branches, but the number of people asking for loans, moving up socially? And it's a great benefit, I assume, for a company, like a bank like yours.
Right. We've seen a consistent growth. We haven't seen an exponential growth, but we've seen a consistent growth over the years in terms of new loan applications, in terms of payment history, and also the amount of people who are informal versus formal. So we haven't seen a huge change in that sense, but we still think that there's a huge opportunity in the underbanked, that most financial institutions don't want to cater to that type of customer, right? And even though I'm talking about maybe catering to a wider range, we do want to appeal to maybe upper middle class. We don't want to lose sight of those customers that come in and we grow with them. So we haven't seen a huge change in that behavior, but we definitely think it's a great thing for the country. It's a great thing for the economy in general, and we see that as a positive thing.
Have you seen any change on loan defaults? Has it gone down or gone up? How does that potential macro improvement is reflected or not in your numbers?
We haven't actually seen any significant change. It's very seasonal. So we do have seasonality incorporated into our models, but we haven't seen a huge change in behavioral, especially with our current customer base. Obviously, the more we cater to higher income customers, the less default there is. But all things equal, we haven't seen a change in behavior.
I know you also provide pension services to Mexicans. Does that fall? Is that a separate entity completely, or does it fall into your banking structure?
So it is a separate entity. So the way it's structured in Mexico, it's a different regulator. It's a different set of rules. So the pension fund called BanCoppel's, it's a different entity altogether, but it plays into the entire consumer financial services strategy in the sense that when you have a customer that has their pension with you or has their pension fund with you, it creates a longer term relationship with that customer because they stay with you, along their basically their entire career. And then at the end of their career, they have the dispersion of the pension fund with you. So it really creates it increases the LTV with our customers, and it creates just better loyalty with them.
Estephany, on with respect to the fintechs, a bunch of fintechs, Mercado Pago, news story, are kind of going after the underbanked or unbanked. And because they're mostly or exclusively digital, they have much lower operating costs than BanCoppel has, I would assume. Are you worried that their cost to serve is going to be dramatically lower and therefore they're going to be able to sort of undercut you on price or sort of user experience and take away your market?
Yeah, that's a great question. And, this wasn't really an issue maybe 5 years ago. We're in a very competitive market right now with, natively digitally players doing really well. attracting a lot of customers. They do have a really good cost to serve. However, there are things and challenges that they still need to, jump over certain hurdles. Like Mexico is still very cash intensive, right? Cash is still king, unfortunately. In fact, at the store level, the payment option that increases the most to purchase items in the store is cash. So we do see that it's still prevalent, and not only prevalent, but it's still increasing. And when you're digitally native and you don't have physical infrastructure, that becomes difficult because customers want cash in, cash out options, which you can have as a fintech, but it's costly. So your cost to serve starts to increase the more customers you have doing cash in, cash out with your partners. Something else that is hard is digital acquisition, right? So my cost to serve may be more expensive, but my acquisition costs are so much lower just because acquiring digitally, especially only digitally with paid media, is extremely expensive. And that's just the reality of the economics of the market. So that's definitely a challenge that we all have, but I also have my physical channels to offset that customer acquisition cost.
What about credit quality? Because I've seen on the public numbers, because obviously Nu is a Sofipo, so is Story, so is Klar,
Right.
and some of the others are banks. I mean, they're looking at write-offs plus non-performing loans, 22, 28%. And some people say that it's difficult to collect when you're fully digital in a market like Mexico.
It is really difficult to collect. It's difficult to collect for two reasons. So one reason is most of them are new. So understanding our market is hard. They're probably going to figure it out, but it's hard because you don't know what parameters are, better telling to be able to understand if someone's going to pay or not. But then you also have a separate factor, which is fraud. And Mexicans, we're experts at digital fraud, and digital fraud is huge. So you have, a twofold kind of thing in digital channels that you have higher credit risk, but you also have higher fraud risk. So that's definitely playing into their non-performing loans. And I think that's definitely something that they're battling. And it's a matter of time because you just have to learn over, a period of time to figure out how to combat that. I think their value add is definitely their experience, right? So they have a beautiful onboarding process. They have beautiful UX, UI. They have, a product that competes with most of us. So it's really just a matter of figuring out if we as incumbents are able to match that experience and whether or not they're able to learn fast enough to get their numbers in the green.
Estephany, and in terms of the incumbent banks that you compete with, how is the competition on your segments going on? Are you seeing an increased presence of other banks trying to take market share away from you, or what's the overall sense that you have at the present moment?
My sense is we're not necessarily competing on segment, but we're definitely competing on digital competencies, right? So we're all trying to rush to figure out how to get to market sooner, how to roll out new features, how to create the onboarding process like the fintechs do. Obviously, we have additional layers of regulatory issues that fintechs mostly don't have, that they're going to have once they start becoming banks, which is the current trend. But that's what I see. I think we're all trying to figure out how to make digital work for us more than banks trying to get into the segment. And we're all trying to do it in a different way, right? So some are trying to figure out how to do their own neobank. Some are trying to partner. Some are trying to, there are different ways of doing it. We're trying to do a complete overhaul and transformation inside instead of, doing a speedboat on the side.
I have a couple of questions on remittances. I think you're maybe the second largest Mexican player in remittances. How has the U.S. crackdown on Mexican financial institutions affected the way you go about remittances, if it has affected it in any way?
I think that the U.S. crackdown on Mexican banks has a lot less to do with remittances than with merchant banking transactions with international players. But in terms of remittances, since you ask, we have been in the business for a while now. So for us, it's really important not just to comply with the law, but we go far and beyond what our regulatory requirements are, both on this side of the border and on the other side of the border. So we have a huge team just dedicated to AML, to making sure that there are no transactions that look off. We have a lot of rules and limits that monitor, what's happening with each transaction, with the corridors. If we have a corridor that we know is a very remittance based, but then we start having another corridor that, wasn't normal, then we start monitoring and taking action. So we're very kosher in terms of what we do around compliance in terms of remittances. We are currently the second largest player in remittances, and we're really focusing on creating value for our customers and making it really easy for them to have their money sent to them with us. So now about 70% of remittances are sent directly to accounts, which is great for our customers because then they don't have to go and line up and get the cash on hand to be able to collect the remittance, right? So it's a very easy process for them.
I think you wrote a few weeks back in LinkedIn that people might be misunderstanding the remittance numbers, and that although the official numbers from the Bank of Mexico show a decline, maybe there's some misclassification going on, and maybe remittances aren't actually declining. What's if BanCoppel's a reasonable barometer of what's going on in the remittance world, what's your take on what's actually happening?
Yes, so we have seen a decline in the general remittance market in the U.S.-Mexican corridor of about 14% year to date. And there's definitely a decline that's, based around what's happening in the U.S. and, the economies and such. But I think there's also a component of not being able to trace all remittances. So we work a lot with our money transmitters over on the other side of the border. We work with our intermediaries to that, help us detect, all types of transactions. To be able to tag them and really analyze where they're coming from, where they're going to, who the beneficiaries are. And recently, Banco de Mexico launched a new type of transaction, especially made for remittances. What I mentioned on my LinkedIn post is that some players are not using it to be able to tag remittances, and that maybe is creating kind of like a shadow remittance that we're not looking at. I think I can't say how much, what percentage of those are going through this like invisible remittance. But it was basically a call to action to have everybody kind of tag the remittances and make everybody compliant with the law and protect the entire financial sector, basically.
Terrific. Just a final question, if I may, Estephany. I mean, where would you like to see BanCoppel in 3 years' time? Would you like to see lots of standalone bank branches? Would you like to see payroll lending being a sort of double-digit percentage of your credit portfolio? Would you like to see mortgages, top 3 in the country? What are your, to the extent you're able to share it, what are your ambitions for BanCoppel?
I love it. I'm not going to do 3 years. I'm going to do 5 years, if that's okay. So 5 years, we have very ambitious goals. We're looking at doubling both income and profit, not just at the BanCoppel level, but at the consumer financial services level. And that obviously requires a strategy per business, right? So we need to be very aggressive on auto loans. That we just purchased a huge auto portfolio loan. And then we also need to increase our origination around mortgages. But our core products, we still think that there's a lot of opportunity to be able to penetrate the market, especially in digital products. And Bank branches are definitely going to be keep being a strategy of growth for us. So we do want to see more standalone branches in key places. We want to make them efficient. We want to make them close to our customers. We want to make them very service based, and have most of our transactions move to our digital channels. And the bank branches be more of a place where people go to get financial advice, as opposed to go do cash in, cash out. We are pointing towards a mobile first strategy. So our app is being massively upgraded with a lot of new features, great UX, UI. So what we're looking for is that we have a lot more customers that are originated through our app and do most of their transactions through the app, and have our entire ecosystem physically be more of like an advisory or a selling point for the store.
I actually have a personal question. I think you used to be a private banker at Credit Suisse in
I
Asia,
did.
and now you're banking to an important degree to lower middle class Mexicans who've never had a bank account before they opened one with Coppel. What do you prefer, providing banking services to the ultra wealthy, or providing banking service to the mass Mexican consumer?
No, you can't make me choose. I think they both have their charm, right? I think private banking has definitely this glamour to it, and service is really important to private banking clients, and obviously returns on their portfolio. So you have to be quite smart about the return that you're getting them and the types of products that you're offering. It's a lot more personalized. It's a lot more structured products. So it's a lot more tailor made. And here, what I love about it is the impact that you can have on a large mass of the population. And it's not as personalized. It's general products that you can maybe personalize in terms of rates or terms or whatever, but it's a lot more standardized. And what I love about it is that one thing that you do and you roll out has a huge impact on so many people. So I really love that aspect of it. So you're not going to make me choose. I like both of my stages. So
Well, maybe in not 5 years, but maybe in 10 years, BanCoppel will have private banking to Mexico.
There you go. We'll see.
Terrific. That was super interesting. Thank you so much for sharing that with us, and hope to have you back on the show before long.
Thank you, Stephanie.
Wonderful. Thank you so much for your time. It was great chatting with you. Take care.
Take care. Today we have Daniela Dib with us. Daniela wrote an excellent piece for the rest of the world about how Mexico's weak energy generation is straining under the boom of data centers. One case in particular that she highlights in her story is Microsoft in Querétaro, which has a big data center and which has had to run on gas power generations because the CFE, the state-owned electricity company here in Mexico, hasn't been able to provide electricity directly. And as we have seen for the past weeks or months, AI needs massive data centers. They need tons of energy. So it seems like this is going to be a more pressing issue going forward for Mexico unless it gets solved. So, Danny, thanks for being with us. And what surprised you most in your research for this story before you started?
Thanks. Yeah, so I've been reporting on the data centers in Querétaro along with my fellow journalist Pablo Jimenez Arandia as part of an AI Accountability Fellowship by the Pulitzer Center. So we visited Querétaro back in February, and we were trying to focus more on the water scarcity and drought problems that have been happening in the state of Querétaro. Not recently. This is it's a problem that's decades long, but it came into the spotlight since the state is attracting a lot of investment for the data centers. There are currently we spoke to Marco del Prete, who is the Secretary of Sustainable Development of the state of Querétaro, and he was kind enough to receive us, to explain to us that they were addressing the concerns about the water. He stated that the data centers had no water issue. They recognized that the state had a problem, but he stressed enough the fact that they were trying to address it. But what he did mention is that there was a problem with the energy supply. And that was sort of like the first thing that brought this issue to our attention, because as we all know, CFE, which is the state-run energy company, is it's federally operated, and every state, like no state has no state has the right to sort of like determine how the energy projects are going to be executed. So he was trying to pinpoint the fact that since the federal government hasn't given enough energy resources to CFE, they were lagging in electricity. So when we started looking more into this, we had some requests for the transparency platform, and we went through the documents of Semarnat, trying to investigate a little bit more on the environmental impact studies regarding data centers. And the only one that we found was one requested by Microsoft to create 7 additional generators run with natural gas that would supply about 70% of what their data center in Querétaro needs. And that's when Pablo, who has been researching this issue in other places, he's from Spain. There's a lot of trouble with electricity, with the electricity grid in Spain too, regarding data centers. So he was the one that said, "Oh, this is something that is also happening in other parts of the world. So let's look into this." And after that, we talked to the Mexican Association of Data Centers, and they also confirmed that they are concerned about the energy capacity that the country can provide to all this nascent data center industry.
Did they give you any indications that the investment in electricity generation and transmission is going to pick up speed, and that this problem is going to be addressed and resolved quite soon? Or do you think it's more likely that people are going to have to put on hold their planned investment in data centers?
So right after we were commissioned to write this story for Rest of World, which was in late July, the Mexican government announced an investment of over 80 billion in transmission infrastructure, aimed to be completed in the next 5 years. So it is something that the government is very aware that needs to be addressed. But what the Mexican Association of Data Centers told us is that along with their investment to build the data center infrastructure in the country, they have also invested in this last part of bringing the electricity to the place that it is needed. So CFE has a monopoly in transmission and distribution, and anyone can pretty much generate it. And it is in that last part that the data center, the companies behind the data centers are pouring their money in, basically because they want or they need it to be operating. So unfortunately, we couldn't get any type of comment from Microsoft or from CFE, but it seems that the companies will still be investing large chunks of what they are destining to Mexico into solving this issue, which also comes as a surprise, considering that an additional 20 data centers are expected to be built in the next couple of years.
And why is this all happening in Querétaro? Why are they getting such a big market share? You'd think it might make more sense to distribute the data centers, around the center of the country and not have to rely on one city for all the electricity generation that they require.
What we found, and what the state of Querétaro and both them and the companies have told us, is that Querétaro has a very strategic location, not only because it's relatively close to Mexico City, but also because there's an important optic fiber hub there. We visited these data centers, and they are quite close to the airport that was built about 15 years ago. There's a lot of other types of investment that you can see that it makes sense that such a high electricity and water demanding industry is establishing itself there, because there are other industries that have also, build their infrastructure around it. It definitely seems also to be like a political struggle between other regions that are also trying to attract data center investment. There's obviously Mexico City, although it's a challenge because it's a place where a lot of earthquakes happen. Querétaro is a little bit farther away from the falla, that goes all along the Pacific. There's also mentions of investment being attracted to the northern states, mainly Nuevo León. But the problem with that, as other energy and data center experts told us, is that if a data center gets installed in an environment that is very warm with very high temperatures, it needs much more water and resources for it to be cooled down. So it does seem that Querétaro has a very strategic location in that sense. And if you look more southern down in the country, there are states like Tabasco or Chiapas where water shortages, for example, are not such big of an issue, but there isn't such a solid industry developed there, and it would require much more large investment in terms of all the infrastructure that they need. Like we mentioned, the optic fiber, all of the safety that is required to be around these data centers. And just like to highlight this, all of the data centers in Querétaro, or mostly the hyperscalers, the one from AWS, Microsoft, and Google, are inside large industrial parks, which are not as easily found in other parts of the country.
And the AWS, Google, Microsoft have their own carbon emission reduction targets. To the extent that Mexico isn't generating a lot of renewable energy, or to the extent that they, in the case of Microsoft that you mentioned in your story, are having to put their own generators, do you think that might jeopardize their targets?
Definitely. That is something that we were trying to get a little bit more light on when we approached Microsoft for comment. And it's kind of like a tricky situation, because even though generators are not the most eco-friendly source of energy to power their data center, they are fueled by natural gas, which, of all the types of fuel, it's not as contaminating as fossil fuels or carbon. So I think they are. We talked to an expert from McKinsey, and he told us that these companies are probably leveraging what is the best option for them in order to power their data center operations. But if they want to keep operating them in the long term, they would have to reassess the way they are fueling them, because since they cannot connect to the CFE grid in Mexico, which, by the way, it is also mostly fueled by fossil fuels, they would need to sort of like reorganize their target goals. I think they backtracked on the fact that they wanted to be zero emissions by 2030. I think they are very well aware that globally they won't be able to reach that. So it is definitely a conversation that companies are having, even though they are very unlikely to extend like a formal statement to the media about it.
Dani, if the Plan Mexico looks at generating more electricity, what's your assessment that it might help with this problem that your story looked at, or is it the transmission where it's the biggest bottleneck?
I think that like you mentioned, the last part, the transmission and distribution, is the one that has been lagging in investment even more than the production of energy. That is something that I believe, like I said, CFE also couldn't grant us any type of comment. But when we talked to McKinsey experts and other experts that are in the matter, they told us that the issue is that if they don't get the infrastructure needed to bring the energy to the data centers, all of these companies might have to come up with similar solutions like generators, which, by the way, that CFE is granting permission to build 7 highly contaminating generators to be operating on site, not as emergency generators as they are usually applied. It was like an odd decision for Microsoft to get this permission, but it seems likely that other companies would have to use this type of solution if the distribution and transmission infrastructure is not built as quickly as they need, because the documents that we found said that these generators would be used for only a period of 4 months, because the data center wasn't able to connect to the grid until 2027. And when we asked how were they thinking of powering the data center until then, which is a year and a half from now, we couldn't get an answer. So it's very unclear how they are powering the data center, but it's likely that they will have to use these types of solutions.
And none of them mentioned potential renewable. I mean, there's lots of sun in Querétaro. That might not be feasible because I guess solar parks require vast amounts of land. Is that what might be more problematic?
I think more than the amount of land is the immediacy in which they need the data center to be powered, because there seems also to be an off timeline in terms of when the this specific data center was built. Microsoft, I believe, has 3 data centers in the country, and this specific one started to be constructed in early 2024, and then it seems that by the time it was about to be operative, they couldn't get all of the energy that they needed. So generators are a very fast way to just like plug it into the data center and start running. I'm not sure if any other solution that is more eco-friendly or more sustainable could be deployed as quickly as a generator, but it does seem that that they might be using them for 4 months at a time, 6 months at a time, and then try to sort of like lower their dependence on these type of highly contaminating power sources.
Well, one hopes that your story will bring light to a big problem and that the federal government does move in the right direction to try to eliminate these bottlenecks that might put into danger an industry that is growing at a quite rapid pace. So thank you, Danny, for raising the issue and bringing it to the forefront.
Thank you. Thanks so much, Eduardo and Damien, for the invitation to talk about this story.
That's good. Well, that's it for this week. Thanks for listening. Please rate us, review us, subscribe to our podcast. We will be here next week. Thank you very much. Amid the rise of artificial intelligence, it is striking that according to a recent MIT study, 95% of corporate AI initiatives are failing. The pressure for immediate results has also fueled a market full of false promises. There are no solutions that can single-handedly transform the future of your company overnight. What truly makes the difference in successful projects comes down to 2 fundamentals: reliable data and ongoing support. Take the case of Arkham Technologies. This Mexico-based data and AI platform works with a customer-centric methodology. Arkham focuses on understanding your challenges and building tailored solutions with one clear goal: delivering results that matter. Arkham begins by ensuring 100% reliable data, by connecting fragmented sources, standardizing business metrics, and deploying high-impact use cases. The platform enables you to unify data and fragmented systems, make decisions based on fully reliable metrics, and solve critical challenges with AI models tailored to your operations. Within the first 4 weeks, once your data sources are integrated, you'll be able to activate automatic closings and reconciliations, inventory control and replenishment, predictive maintenance, anomaly detection, automated forecasting, and other industry-specific capabilities. Request your demo at arkham.tech/es/whitepaper.